Good morning and welcome to the market forecast for Tuesday, June the 29th. I'm John Hoagland. Thanks as always for trusting me with your time. As always, we're going to look at these markets hopefully through accurate context, through the lens of risk management, and always remembering patience. Economic numbers this morning just out: the Case-Shiller and FHFA housing market index, housing price index. I haven't had a chance to really look at that here just yet. 9 o'clock this morning in Central Time. We're looking forward to the consumer confidence number. As far as other news is concerned, just looking at the markets this morning, U.S. stock indices somewhat mixed in early trade as we await unemployment data later in the week. Our equities really kind of holding and kind of keep pushing new highs. Facebook closed 4% higher yesterday after beating an antitrust case against the FTC. A lot of major banks have announced plans to boost dividends. The banking sector will be looked at closely here this morning, of course. And crude prices have softened ahead of the OPEC meeting as the COVID, the Delta strain of the COVID seems to be gripping the UK as well as some Asian countries. So not good news as far as that's concerned. As always, we like to offer the opportunity for you to like, share, comment, question, feedback, and heckling are always welcome here. Make sure you subscribe to our YouTube channel. Taking a look this morning early at the VIX, down 2%, again, down below 16 at 1543. The dollar index up a little bit this morning at 92.18, and the 10-year yield is just holding steady right around that 1.5%. As always, I got to say good morning to everyone. Brian, first in the room, you win the prize. Doris, Tone, Murph, good morning. Let us know if you all had a good trading day yesterday. Murph started great, made some mistakes late in the day. Good overall, though. Well, those mistakes offer us the opportunity to learn something. You know, these markets are constantly tempting us to look at the details, the small details, so we tend to miss the bigger picture. That's why we're always kind of starting from the top down, longer time frame to the shorter time frame. Clarence, good morning. Bill, Theo, Tanya, Jorg, John, good to see everybody. Vici, Keith, good to see you. James, PK, good morning. Zorain, Jose, Greg H, Tim G, good morning. Rob T, George Adams, and Jason. Buenos Tuesday, everyone. Yeah, it is Tuesday. We do have some more important economic data coming out as the week goes on here. Tomorrow morning, the ADP employment report, jobless claims on Thursday, and unemployment on Friday. So don't forget, we have the OPEC meeting on Thursday that is likely to affect crude pricing, of course. And don't forget, again, we have group coaching tomorrow, Wednesday, 1 o'clock p.m. Central Time. There's the link to jump in. Good morning. Had a decent morning. Good morning. The chef, Mr. Magianis, is here. Trading Research had a decent morning, decided to quit, later took one trade and gave it all back and then some. Trading Research, that happens. It's happened to me more times than I care to admit to. Sometimes it's just better off to just walk away and take what the market has given us. Greg saying, not a good day. I let my process fall apart. My God, grant me the wisdom and discipline, of course. Good morning, Deanna Floyd. So yesterday was an interesting day. If we're talking about equities, then the S&Ps and the NASDAQ, and it seemed like all four of the indices were heading in different directions all day yesterday. The NASDAQ was screaming higher. S&Ps and the Dow were had left the opening ranges near the highs. Yes, be selective, Vlad. Yes, absolutely. So And we're, kind of in some smaller ranges here. Range bound trade tends to make people, well, I mean, we've gone from trending markets to somewhat range bound markets, and it's a change in the market state that changes our decision making process, or at least should. And sometimes it takes a little time for us to adjust to these new market states, and and they can change at any time. We can go back to a big ranging market any moment, and that keeps working in our brains, and it makes it difficult to trade these range bound days. We're going to see what we're going to be looking at here this morning. As we get into these charts, and let's do that right now. Let's take a look at the daily in crude. All right. So we lost about 7,600 in open interest on this down day yesterday. Kind of thinking maybe Friday we'd have a long liquidation break, but it happened on Monday. Sometimes we're a day early on those things, right? So maybe a little bit of profit taking ahead of the OPEC meeting yesterday. Weekly kickoff low tested in the extended trading hours last night is last week's low. Weekly kickoff low. Some confluence there. Rejected so far. Let's see what we're looking at in the 30-minute chart. Really just opening up. Here's our test of that weekly kickoff low. That was a naked point of control as well that we tested down to almost to on Thursday. It took till last night for us to get a real test down below it. Obviously rejecting, moving higher, back into range, back into value. No gap, no real overnight inventory to speak of. We were lower, we've moved higher. We've rejected this area down here, and when we are in range-bound trade, when we look at this 30-minute chart, 1, 2, 3, 4, 5, really kind of 6 days in range and in balance here. When we've rejected down below, we got to go the other direction. We're always looking to fade the extremes until proven wrong. We were proven wrong as far as acceptance below this level last night. Now we've got a nice little rally going. I'll be looking for this rally to test the weekly high from last week at some point here as we continue to push higher. Are we going to need to get into something very quickly this morning? I'm thinking maybe not, because we're in range and in value. So again, try and stay patient. Look at the bigger picture. The bigger picture is we're range bound. Last week's high and weekly kickoff low are more important inflection levels, are more important levels to look for. And to the E-mini S&Ps, another all-time high in the extended trading hours last night. Just seems to want to keep doing that. We have another late spike situation. We'll see that on the 30-minute chart here. We've got last week's high as a pivotal level for us this morning. If we continue to hold above, I'll look for the market to continue this upside momentum. If we can't hold above that, we'll look for some sort of a pullback. Now, looking at the 30-minute chart, we added 1,400 in open interest yesterday. Not an excessive number to kind of show that the market is there, that there's interest in the market, let's say. The more important thing is, yesterday we opened in an assumed late spike. The late spike actually played out for us by the end of the day. Now we've got another late spike that it looks like we're going to open inside of or above. If we open above and we leave that gap, we're going to be looking for this market to continue this move to the upside. So, yeah, this is also going to, last week's high here, this purple line, last week's, session, last week's high for the entire and extended trading hours is going to be pivotal for us today. Again, if we can hold above it and, we can open or open inside or above this late spike, that's, it's a good indication of acceptance of higher pricing, and we'll look for the market to continue in that direction. Looking like perhaps we may put in a gap before the open here. I'll be very interested to see if we can maintain that gap and move this market higher. Take a look at the NASDAQ now. Oops. So volume maintaining, adding 2,200 in open interest yesterday. So that's all encouraging for the continuation of this move to the upside. Again, last week's high is going to be somewhat pivotal for us, but this market has been so organized in its rally that it hasn't really left a lot of unfinished structure down below. When you think about points of control or gaps, and I think there's a little bit of a gap down below, but it's been kind of reaching back to touch points of control all the way up, which is very organized. Take a look at the 30-minute chart. So there's our little gap. Okay, we closed that gap on Friday. We do have a couple of unfinished points of control, but very close. When we look further back, everything seems to be pretty well rechecked. So as long as we remain above weekly kickoff low this week, I think we're going to be in pretty good shape for a continuation to the upside. If we start taking out these naked points of control down below, then I'll start to get a little bit concerned. But right now, it looks like this market is going to open in a late spike. Okay, the base of that late spike in the NASDAQ is 14,495. I didn't announce the level in the S&Ps, but that level, the late spike base, is 4278. Yeah, again in the NASDAQ, that level is 14,495. 14,495. So opening in range, perhaps above value, watching this late spike base here. We open in the late spike or above. It's acceptance of higher pricing. The way it went yesterday, the NASDAQ drove right away. Okay, about from not having a late spike, it drove higher immediately. The NASDAQ the S&Ps broke and then rallied at the end of the day. So the acceptance of higher price may be in a little bit longer time frame than we'd like to think, or that we'd like to respond in. So watch the late spike. If we open above it, that may mark acceptance of higher pricing. We can see if this market can continue this move to the upside. If not, we reaccept inside value from yesterday. We may just kind of rotate inside of value for the better part of the day. Well, some of this is contingent, of course, on consumer confidence coming out here. So now we've got a opportunity to see a breakout from balance in gold at last week's low and weekly kickoff low. It was a nice opportunity at weekly kickoff low for a potential long in the middle of the night last night. But we've left the opening range at the high of the regular trading hour session. And when we come into balance rules, when we stay in balance, we're reversion trading. Once accepted outside of balance, we're going with the breakout. And we could consider this move to the downside a potential breakout from this area of balance. Take a look at the 30-minute chart here. All right, so we got settlement up here, 1780.70. Market kind of getting a little bit short last night. We had an opportunity to, have the last week's low checked almost to the tick for a little bit of a pullback, another check of it, pulling back. The opening range is the high of the regular trading hour session today. Please, somebody tell me you caught it. It's been a long drought as far as opening range trades have been in gold. This was a really nice 250 tick opening range trade that was really only about 12 to 13 ticks of risk. Big downside, big opportunity here this morning for us. So please tell me somebody caught this. And we are now, holding below a couple of inflection points. If we continue to accept below these levels, the market could easily continue to the downside. We've got the dollar looking a little bit strong this morning. I'm going to be very interested to see if we remain below weekly kickoff low here. If we do not, we may start to put in a base that may give us an opportunity to look for a move back towards the balance that we are currently attempting to break out of. And to the euro. So, as with gold goes the euro, heading lower, opening range. I believe the high of the regular trading hour. The dollar boost certainly putting pressure on some of the currencies. We finally saw a little bit of a boost in open interest in the euro yesterday. We added 4,400 in open interest on a little bit higher volume. So there's a little bit of blood coming back into this market, still largely range bound and short time frame controlled. Take a look at the 30-minute. This is settlement 1942. So the market continuing to perhaps come back and recheck this naked point of control down here. This could end up being supportive. I don't want to fight this move to the downside. Seems to be one time framing pretty well. And again, opening range is the high of the regular trading hour session. As long as that remains, I'll be looking to sell pullbacks to see if we can continue this market lower. It's been one time framing now for a couple of hours. I don't want to fight that. We get an opportunity at a visual support level. That gives me an opportunity to perhaps limit my risk, but I'll be looking for some sort of structure in the day time frame before I'm looking for anything opposite the bigger picture here. In the 10-year short time frame control remains. We're range bound. Open interest crept a little bit higher yesterday. We added 19,000 in open interest. Volume slowing, continuing to slow. Perhaps maybe today we'll bring in some volume. Take a look at the 30-minute chart here. So, wow, this point of control, naked point of control, just really perfect, a direct hit for those that were looking for that as a potential target or a potential entry. Where are we now? Well, we've got settlement right at the point of control from yesterday. That's 132.08 and a half. We're in range, outside of value, range bound. I mean, it would be a cinch for this market to come down here and trade to this naked point of control and yesterday's point of control. So I'm going to really try and focus on those levels for opportunities. And in the middle of that, I'm not really that interested. So there's a lot of visuals, a lot of naked points of control here, and I'm going to focus on those for any opportunities in the 10-year this morning. You guys got quite the conversation going on. And I love it. Let's see. Let's get involved. All right. Yes, be selective. That's really the hardest part. I was doing well, got overconfident. I see that what mistakes that I made and hopefully won't make them again. All you can do is learn from bad days. Absolutely. I think part of the problem is I think we all get kind of roped into this, but what if? What if the next trade's going to be the one that's going to make me whole again? Or what if the next trade's going to be a big home run? But makes it very difficult just to walk away and accept what the market has given us. Trading research. Similar with me, I had to stop and in place and ensure I kept a decent part of my early earnings. See, that's a good thing to do. Once you get to a certain point, you will really want to kind of guarantee that you're going to end the day a plus player. Doesn't make it any easier to walk away from, from losing part of those profits, but that's part of trading. It just seems to be there's always going to be some degree of regret, no matter what we do, no matter how good the trade is. We always think it could have been better. No matter how we manage the trade, we always think we could have managed it better. So, Murph, for me, one key is when you're ahead, don't give it all back. Yes, we already talked about that. Thanks, Murph. Yes, I agree. In this instance, I've recently added back market internals into the mix. Yesterday, everything was very negative in the ES. It was. One time framing up. However, I was expecting a late day flush and risked it all. Oh, it wasn't much as the morning was so slow. I gave him, and a little more. It seemed the overnight high was going to be taken. It would have done so earlier, but I was wrong. It was in the markets and the site. It was in the markets sites at that point, yes, and just ground higher. It can be deceptive. And, as I was talking about this morning before we were looking at the charts, the markets have a real knack of getting us so mired in the little details that we miss the bigger picture. I'm going to start, Murphy, you're going to start watching some other markets besides the NASDAQ. Would love to have a piece of that move in gold. Man, that was something else. 250 ticks straight down. What a move. Soybean meal will give a long opportunity soon. I haven't heard anybody talking about soybean meal in quite some time. It's kind of refreshing. Ange, why do you only use regular trading hour for volume profile versus the whole time frame? This is a good question. I'm going to go back to the charts for just a minute, and I'm going to take a look here and show the S&Ps because it's a really stark picture of where the volume is. So we've got the volume bars here. So regular trading hours is where the majority, or I would say even all of the market participants are available to influence the marketplace. Overnight, there's very little volume. All the volume is during the regular trading hour session. So I deem that information more important than the overnight information. Not that the overnight information isn't important, but it's only a sector of the trading community. It's not the whole available participants. Your bigger participants are going to be active in the markets during regular trading hours when it's the most liquid, and they can make the least impact with the biggest number of contracts, right? They want them liquid, and they also like sleep. But it's a really good question, and I hope that kind of explained why I'm always looking at the regular trading hours. As far as like gaps are concerned, those are important. And points of control and value high and low are important in the regular trading hours because, again, all of the participants are available to impact the marketplace. Let me know if that answers your question, Ange. And it seemed like a new name. Welcome if this is your first contact or first trip to the market forecast. We hope that it's helpful. Yes, the CME has done away with the halt. It will not affect Top Step's trading hours. No. There's really, once the New York Stock Exchange closes at 3 p.m. Central Time, there's usually not a lot of momentum or opportunity there. I'm usually flat right after that if I'm in a position, and you've got till 309.59 to finish up. Murph, I'll look forward to having you there. Greg H., any thoughts on Fairx? I'll get some. Yes. Nothing right now. Greg X. Greg H., I should say. Ryan, you're welcome. All right. Let's take our deep breath and be ready for this trading day if we aren't already. We're already putting up a gap in the S&Ps above a late spike. That's acceptance of higher pricing as long as we continue that structure to the upside. It's going to be an interesting trading day. I'm going to venture and say that we're going to have a bigger range than we did yesterday. Let's see how that plays out. I'll be back for the market recap to this afternoon. We'll also be having the coaches playbook at 11:30. Looking forward to seeing everybody there, and yeah, I'm looking forward to tomorrow, the group coaching tomorrow as well. All right, take your deep breath. Humble, grateful, and creative in your trading today. Looking forward to seeing some good days for everybody today. That's our hope here. We're really looking forward to seeing your success. So get out there, make some good choices, be disciplined, be patient, trade well, and we'll see you at 11:30 for the Coach's Playbook. Till then, trade well.